Matthew Sallee, Head of Investments at Tortoise Capital. Your firm has a variety of strategies that target investments in the energy space, including artificial intelligence. But first, can you tell us about Tortoise Capital, its services and offering?
Sure. Thanks, Chris. So we manage about $9 billion, founded in 2002, and started out with a small separately managed account business and launched our first closed-end fund in 2004. Since that point in time, we've raised a variety of closed-end funds, open-end funds, and separately managed accounts. And most recently, over the last couple of years, we've really been focused on building out our ETF lineup. We've actually converted one of our mutual funds to an ETF. We converted three of our closed-end funds to an active ETF. And that's really, and we've also launched, you mentioned the AI product, so we launched that this year as an active ETF. And that's an area we'll look to continue to build out our product lineup. But I think we are somewhat unique as an energy manager in that we have really all structures, all wrappers, something for everybody, basically. But pretty much all energy, or what we call, for lack of a better word, energy adjacent, which is where the AI strategy falls in. Obviously, there's been quite an intersection between technology and energy, and so we started to recognize that. We thought that this is, a very unique product in the marketplace.
So, say more about that AI strategy. What exactly is the play, and how do you see it being something that investors might want to explore?
Basically, we're invested in kind of all the enablers of artificial intelligence and data centers. So I think, the market's, becoming very aware of the need for electricity. That's the gating factor. Multiple technology CEOs have talked about the need for electricity, and that grid connection is a gating factor. So we definitely like the energy aspect. And as we started looking, deeper and deeper into what we call picks and shovels, so this is basically when you hear Google, Meta, and others spend dollars this year, we're investing in the companies that are spending the money. So everything from not just energy, but also the data centers themselves, the digital infrastructure, the cooling infrastructure, really all kind of the physical infrastructure that enables data centers. And what we found is these different portions of the portfolio tend to have a relatively low correlation. So the underlying names, or at least some of them, can be quite volatile, but the fund itself is not that volatile because we've got utilities, energy, digital infra, and the data centers, so they tend to not all trade together, generally speaking. So it's a fund we're really excited about.
And as I understand that, at least the broader concept in the AI market is that we're in relatively early stages when it comes to AI infrastructure, correct? This is like years, if not decades long growth process, perhaps.
That's really where we've kind of came out on it is, electricity demand hadn't grown in 20 years. And, going forward, it's expected to grow 3 to 4% per year, which is massive. So basically doubling over the next 10 years. And this is not a 10-year story. This is, a multi-decade story in our view. When the hyperscalers are spending, multiple billions of dollars to build data centers, these projects don't happen overnight. We're starting to bring back nuclear plants that have been mothballed. So these are very long lead time investments that give us a great deal of comfort in our forecast for demand growth, the outlook for energy, the outlook for digital infrastructure. And it's really changed the energy story in particular from being one that's cyclical, oil driven, fits and starts with shale production, to now the market is dominated by electricity. We've coined a phrase, electricity is the new oil, and we really believe that. There's more money being spent on electricity infrastructure now than all oil drilling. So it's the market had really changed.
Matt, these have been very interesting insights, I think relevant for really everyone, but certainly people in the energy investment space. So thank you for your time.
Absolutely. Thanks for having me.